The Fed pivot is incoming. This is going to be one of the most important weeks in crypto in a very long time. Let me show you why. How's it going, everyone? My name is Jake with Trade Confident. Today, I'm going to be going over what could be the most important week in crypto that has happened in a very long time. Tomorrow, December 13th and Wednesday, December 14th is when the FOMC meeting is happening and is likely to be the Fed pivot. This is when the Federal Reserve plans to lower their interest rate hike amount from 75 basis points that we've had for the past few meetings, now on to 50 basis points, which means that the Federal Reserve is pivoting their stance on the economy. It shows that inflation is finally slowing down and we could be seeing upward movement from here. Let me show you all the information you need to know about the FOMC meeting coming up, and at the end of the video, I'll talk about technical analysis and show you where I think Bitcoin is heading next. Let's dive into it. Right now, I'm on the Federal Reserve website. This is just showing you that this is December 13th and 14th officially when the meeting has happened. It's upcoming pretty quickly here, so pay attention to that. And this article is from Reuters. US dollar slips as market expects lower inflation slowing Fed rate hikes. The dollar fell on Monday in thin trading as investors priced in a lower U.S. consumer price inflation number for November, and the Federal Reserve likely to slow the pace of its rate increases at the conclusion of its two-day policy meeting on Wednesday. Consumer inflation data for November lands on Tuesday and is expected to show a 6.1% rise in the core reading on a year-on-year basis, which excludes food and energy prices, down from 6.3% in October. In late morning trading, the euro rose 0.1% against the dollar to $1.0546. The single European currency has gained almost 8% so far in the fourth quarter, as investors have previously banked on the European Central Bank sticking to a course of aggressive rate hikes. The weaker dollar is signaling that the market is seeing lower inflation, and it is hearing what Fed Chair Jerome Powell is saying. The Fed is cutting back on the pace of its rate increases, and the market is pricing all that in, said Joe Perry, senior market analyst at Forex.com and City Index in New York. Another really big note here, this week is one of the most macro-packed so far this year, with 4 major central banks holding their final policy meetings of 2022. So basically what this article is telling us is that the FOMC meeting has already been priced into the market, and I'll show you that on the 4-hour time frame. You'll actually notice a pattern on that time frame, but again, I'll get into that later. But for now, let's check out the metrics from Trade Confident and see where we're going next. I'm looking at the Bitcoin metrics from tradeconfident.io. Now, these are brand new metrics, guys. You'll see from our previous videos, we have added quite a bit more, and this is not the only coin that we've done this for. Every single one of our coins on the tradeconfident.io website has a huge upgrade. So let's talk about it. Right now, I'm looking at the Bitcoin Emotional Index here. You've probably heard the term be fearful when others are greedy and greedy when others are fearful, and you'll notice a pretty interesting correlation here. As people get excited, the price tends to fall. As people tend to get fearful, the price tends to move up. So in this chart, we're actually reading neutral, and as you can see, we're pretty much trading sideways, so that's to be expected. Long versus short trades here, we can use this metric to show that short trades are decreasing, and typically when this happens, we see slight price increases in the near future. As you can see, shorts are decreasing. I am expecting this to increase as the FOMC meeting hits. We're seeing a tiny bit of long sentiment here. I don't expect the market to move crazy much here, but again, as prices move down, whales and smart money tend to move the price up. Keep in mind, this is a sentiment chart, so this is what we're expecting them to do. The Bitcoin breakout indicator is brand new here. If the green bars are below the impulse line, this means we are expecting big moves soon. If we see the green bars fall above the consolidation line, it means we're likely to continue moving sideways, and we saw exactly that happen here. Now, we've been expecting an impulse move for some time after the FTX drop that happened right here. And I think after the FOMC meeting, we're finally going to get it. This is the Bitcoin major support and resistance level. The last support level we got was at $15,479 here. And you can see these are support levels originally, but they've been created as resistance levels now because the price is underneath them. But these fall around to $18,000. And I agree that this could be the next resistance level that we're targeting. Last but not least, we have the Bitcoin daily trade scanner. This is our TC top and bottom finder indicator here. You can see that the price is under the blue midline, showing that we are in technically a downtrend here. It's riding it though, so sideways movement is to be expected. But again, on the 4-hour time frame, I think you'll see more likely a move up soon. Now you can get all of these metrics and more at tradeconfident.io. The links for this are in the description. Be sure to check it out. But with this membership, it is so cheap, guys. We actually lowered the price and added tons and tons of charts. So if you want to get access, it's $59 a month. You get trading charts, all of those trading charts you saw for 20 cryptocurrencies here. You also get access to daily trade scanners, quality trade updates, macro metrics, community chat, masterclass courses, morning brew overview where we do all the hard work for you. You'll get access to our Telegram and live Zoom coaching every single month and top-notch support. So if you ever have any questions, be sure to email us at btradeconfident@gmail.com. Checking out trading here, we're on the one-day time frame here. I just want to show you an interesting pattern here. Each of these white lines that you see represent an FOMC meeting and the following market moves after they happened. You'll notice that after each of these lines, there is a green candle. Right here, it was a 5% move up. This one was just a 2% move up, but we got a 12% move up, 5% move up, 5.87% move up. So we can see that about 5 to 10% is where we can expect the market to move immediately after the FOMC meeting happens. We've also noticed that there is slight downtrends in front of each one of them. This wasn't slight here, but you get the drift here. Very slight downtrends in anticipation of the FOMC meetings before a move up, kind of a small move up, again, 5 to 10%. But if we scroll in, if we zoom in right here, you'll notice exactly the same pattern playing out. You'll see that there is a slight downtrend here and what we can expect to be a 5 to 6% move, possibly bringing us up to $18,000 resistance here. Now, of course, we do have two other structure resistances that we have to break through before we reach 18,000, but I really don't think that is to be unexpected. I think 18,000 is really going to be where we're going to head. Let's get a closer look though on the 4-hour time frame. You can see we've generally trended down. We've maintained the $17,000 structure support, and we are riding it again. I think this is the lowest we're going to go. We may see 16,850, but it's not going to go any lower than that before the FOMC meeting. I really don't expect that to happen. The trend exhaustion and price versus well money flow saw a bottom here and is moving back up. On the price versus well money flow, this means that whales are moving money back into the market. This is a really bullish sign, and we could see, and in fact are actually seeing price moves up to correlate with that. Same on the trend exhaustion. The trend exhaustion saw a very, very small move into the bottom red section, which is where we're typically expecting trend reversals. We got that, and we're on our way back up. Now, you saw overall there's an average 5 to 10% move up in the market after each FOMC meeting that has happened in the past year. Even despite the fact that they were 75 basis point interest rate hikes, it typically meant that it was priced in, and as soon as it dropped, as people dropped the price as the FOMC meeting happened, as retailers got scared that, oh no, the interest rate hikes are going up, that's when whales tended to buy. They bought into the market and pumped the price up 5 to 10%. Now, economists, experts, everyone is expecting a 50 basis point interest rate hike. What this means is that the Fed is pivoting. They are changing their stance on the market, and they are slowing things down. They are no longer aggressively increasing their interest rate hikes in order to stop inflation. This means that they're seeing inflation slow down, and they're becoming less aggressive and hopefully creating more life into the market. Now, that's not to say we're quite out of this yet. This is going to continue for some time into 2023. The Federal Reserve has announced that it wants to put the interest rates somewhere close to 5%, and we're nowhere near that quite yet. So we do have several more interest rate hikes before we really pivot. Once the Federal Reserve starts lowering the interest rates, that's going to be absolutely crazy. We have a very long time before that happens, and we still could see a sideways market on pretty much through 2023. That's generally what's expected. But crypto could react differently, so we'll have to keep you updated on that. Overall, we have two right here resistances that we need to break before we hit that $18,000 mark again. The first one's at $17,300. We met that last week. And the next one is 17,550. That is structure resistance way back here. Now, 18,000 is absolutely not out of the question. We have both structure support and resistances previously using $18,000. And because we are expecting a larger move up, we can expect and wouldn't be surprising to shoot past 17,300 or 17,550 in order to make that $18,000 mark. Given the generally bearish pressure on the market, though, I would be honestly shocked to move much farther past that. It is possible, but $18,000 is the level that I'm looking at for Bitcoin. Now, if you want access to the indicators you saw me using in this video, links are in the description. I'm not going to go into crazy detail. I already gave you guys an ad for the membership, but again, links are just in the description. It'll take you to a page and it'll tell you exactly how to get the best deal. Follow that if you'd like. In this video, I covered the FOMC meeting. I covered exactly what's going to happen, what the experts are expecting with a 50 basis point interest rate hike. I showed you the expected inflation numbers, and I used the trade confident metrics and indicators to show you exactly where I think the market's heading. Overall, just in conclusion, we have two resistances that we need to break. The first one is at $17,300. The next one is at $17,550. And I expect we could hit even $18,000 after the FOMC meeting happens this weekend, ending on Wednesday. That's when we're going to get the official interest rate hike numbers. But experts are expecting a 50 basis point interest rate hike, which creates the Fed pivot. This changes the Federal Reserve sentiment in the market and shows that they are becoming more and more optimistic. This is great news, and we could be seeing the end of all of this crazy bear market soon, probably within the next year. With that, thank you so much for watching. If you enjoyed this video, please like and subscribe for more crypto content, education, and analysis every single weekday. With that, trade safe, trade confident, and I'll see you in the next video.